Hello and welcome. In today's video, let's talk about 5 changes that have been proposed in the Union Budget 2023-24, all related to income tax. First, new tax regime is going to be made the default tax regime. We have two tax regimes. One, the normal tax regime, which is now more familiar as the old tax regime, and the other is the alternative or new tax regime. As of now, normal tax regime is the default tax regime, and if you wish to choose the new tax regime, you have to specifically opt for it. But in the budget, it is proposed to make this new tax regime the default tax regime, and if you wish to choose old tax regime, then you have to specifically opt for it. Let's quickly understand the difference between these two tax regimes. In normal tax regime, you get several exemptions and deductions like HRA exemption, ATC or ATD deduction, deduction of interest on housing loan and so on, which you don't get in new tax regime. Then tax slabs and rates of taxes are going to be different under both these regimes. Now with this basic understanding, let's now see what other changes have been proposed to the new tax regime. First, in new tax regime, the basic exemption limit as of now is 2.5 lakh and it is proposed to increase this to 3 lakh. If we compare this with the old tax regime, basic exemption limit is 2.5 lakh. Let us now see the existing tax slabs and rates of tax in new tax regime. If your income is more than 2.5 lakh and if it is up to 5 lakh, then rate of tax is 5%. Then for every additional 2.5 lakh of taxable income, the tax rate is going to be incremented by 5% until you reach 15 lakh, when the rate of tax is going to remain at 30%. Let's now see the new tax slabs and rates of tax. If your income is more than 3 lakh and if it is up to 6 lakh, then rate of tax is 5%. More than 6 lakh up to 9 lakh, it is 10%. More than 9 lakh up to 12 lakh, it is going to be 15%. More than 12 lakh up to 15 lakh, it is 20%. And over 15 lakh, rate of tax is going to be 30%. Let's now compare this with the old tax regime. If your income is more than 2.5 lakh and if it is up to 5 lakh, rate of tax is 5%. More than 5 lakh up to 10 lakh, rate of tax is 20%. And over 10 lakhs, it is 30%. The next change is related to standard deduction. In new tax regime, you don't get standard deduction unlike old tax regime where you get a standard deduction of 50k. Let's say your income is 10 lakh, you can straight away reduce 50,000 and pay tax for the balance 9.5 lakh because of the standard deduction. Now in the budget, it is proposed to introduce this standard deduction of 50k even for new tax regime. Third change is related to rebate. If your taxable income is up to 5 lakh, then you get 100% rebate, that is you don't have to pay any tax on it. And this is applicable to resident individuals. Now it is proposed to increase this limit from 5 lakh to 7 lakh provided you choose new tax regime. To put it differently, if you choose old tax regime, then this limit is going to remain at 5 lakh. 4. Rate of surcharge. If your taxable income is more than 5 crore, then in addition to income tax, you have to pay surcharge at 37%. So maximum rate of tax that is applicable to you would be 42.74%, including 4% higher education cess. Now it is proposed to reduce this 37% rate to 25% if you opt for new tax regime. So maximum rate of tax is now going to be reduced to 39%. After going through all these changes, we can easily say that the government is now promoting this new tax regime. It is not surprising if this old tax regime is altogether scrapped in the upcoming years. If you would like to know more about this old and new tax regime, you may consider watching my earlier video, the link in the top right corner. Let's now move to the second change, which is leave encashment. If you are a private sector employee and if you get leave encashment either at the time of your retirement or when you switch your job, maximum exemption is limited to 3 lakh. It is now proposed to increase this limit from 3 lakh to 25 lakh, and this change is going to be applicable for both new and old tax regime. To know more about taxation of leave encashment and what are its exemptions, you may consider watching my earlier video. Third, benefits to senior citizens and women. First, let's talk about senior citizens. Under Senior Citizen Savings Scheme, maximum limit for deposit is 15 lakh as of now, and it is now proposed to increase this limit to 30 lakh. To know more about this scheme, you may consider watching my earlier video. Next benefit is also for senior citizens. For monthly income account scheme, maximum limit for deposit for a single account at present is 4.5 lakh. It is proposed to increase this to 9 lakh. And in case of joint account, at present the limit is 9 lakh, which is proposed to be increased to 15 lakh. Now, benefits to women. A new small savings scheme exclusively for women is proposed to be introduced. Under this scheme, women can invest up to a maximum of 2 lakh for a tenure of 2 years, and rate of interest would be 7.5% per annum. This scheme would also give you an option for partial withdrawal. Fourth, capital gain exemption. Under section 54 and 54F of Income Tax Act, you get certain capital gain exemptions. That is, if you sell long-term capital assets and invest in a residential property, that is house, then whatever capital gain that you incur is going to be exempt to the extent of your investment in the new house. And this is subject to satisfaction of certain conditions. As of now, there is no limit for this capital gain exemption. In the budget, it is proposed to cap this exemption to a maximum of 10 crore. So if your capital gain is more than 10 crore, then the exemption would be limited only to 10 crore and you need to pay tax over 10 crore. This change is basically to discourage super rich from availing this capital gain exemption benefit. Fifth and the last change is related to Presumptive Taxation Scheme. Under Presumptive Taxation Scheme, certain percentage of your turnover or receipts would be considered as deemed profit on which you would be required to pay tax. Now, if you are an eligible business, then you can opt for Presumptive Taxation Scheme under section 44 AD, and 6% or 8% of turnover or receipts would be considered as profit on which you would be required to pay tax, provided your turnover or gross receipts in the last financial year is up to 2 crore. It is now proposed to increase this limit from 2 to 3 crore provided your cash receipts are up to 5% of your turnover or gross receipts. Similarly, for specified professionals like accountants, lawyers, doctors and so on, there is a Presumptive Taxation Scheme under section 44 ADA where you can declare 50% of your income or gross receipts as profit and pay tax accordingly, provided your income or gross receipts in the last year is up to 50 lakh. It is now proposed to increase this limit to 75 lakh, provided your cash receipts are up to 5% of your gross receipts. To know more about these presumptive taxation schemes, you may consider watching the playlist. So these are some of the changes that have been proposed in the budget 2023-24. This is all I have for you today. Thank you for watching.